Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 23rd of March. Today, market participants will turn their attention to the US, where the House of Representatives is expected to vote on whether to repeal and replace the Affordable Care Act with President Trump's new alternative, the American Health Care Act. A few weeks ago, Trump pledged to deliver a phenomenal tax reform plan, but only after he took care of the healthcare issue. As a result, we think that this vote will be closely watched by investors. If the bill is voted down, market could begin to speculate that tax reform is likely to take much longer to be introduced and implemented, and thereby leading to further downside correction in the assets that have priced in the Trump effect, such as the dollar and US equities. Escalating political uncertainty could also benefit safe havens like the yen and gold. Dollar yen tumbled yesterday, breaking below 111.60, the lower bound of the range that contained the price action since the 11th of January. The rate hit support at 110.70 and then rebounded to challenge the key hurdle of 111.60 as a resistance. A rejection of the plan today is likely to encourage sellers to take advantage of that resistance zone and perhaps aim for another test near 110.70. If they prove strong enough to overcome that support as well, then we may experience extensions towards a psychological round figure of 110. On the other hand, if the House votes for the bill, we could see a relief bounce in the dollar and US stocks, as the risk of extended tax reform delays diminishes and as market participants become more confident that Trump can implement his overall agenda. In this case, dollar yen could emerge back above 111.60 and signal its return back within the range it had been trading since early January. Having said that, though, even if the plan passes the House today, it has to be approved by the Senate perhaps as early as next week. Therefore, although a House pass could spread some market euphoria, there is still a lot to be done before we have a concrete outcome. Now, yesterday, the RBNZ kept its official cash rate unchanged, as was widely anticipated. The meeting statement did not contain any major surprises, and as such, there was a relatively limited reaction in the Kiwi. The officials noted that the trade-weighted exchange rate has fallen 4% since February, and that although this is encouraging, further depreciation is needed to achieve more balanced growth. They kept the door open for further easing by reiterating that numerous uncertainties persist, particularly in the global outlook, and that policy may need to adjust accordingly. Kiwi dollar traded somewhat higher ahead of the decision to find once again resistance near the 0.7075 obstacle and the downtrend line taken from the peak of the 7th of February. In the aftermath of the meeting, the rate slid again, but the slide remained limited above the 0.7015 support line. We hold the view that the short-term path is negative, but we would like to see a clear break below 0.7015 before we assume that the recovery started on the 14th of March is over and that we are back in the direction of the trend. Such a break is possible to initially aim for the next support of 0.6970. As for the rest of today's highlights, during the European day, the only major indicator we get is UK retail sales for February. Both the headline and the core rates are expected to have risen following 2 consecutive months of declines. Coming on top of the latest acceleration in the nation's CPIs, rebounding retail sales could fuel further market expectations over a reduction in Bank of England stimulus and thereby bring the pound under renewed buying interest. From Eurozone, we get the preliminary consumer confidence index for February. From the US, we have new home sales for February and initial jobless claims for the week ended on the 17th of March. As for the speakers, today's agenda includes only Fed Chair Yellen. Even though she is one of the most important speakers in the financial world, we do not expect her to deliver any new market-moving information. It has only been a week since we heard her views at the press conference of the latest FOMC meeting, and there have been no major changes in the US economy outlook since then. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.